Hi, today is Wednesday, March 11th, 2020. This is Jonathan Gurney. A reminder that this is for informational purposes only, mainly directed to my clients. If somebody learns something along the way, fantastic. These are ugly days. They are not fun. The W price action, the up and down price action, really makes people very emotional. It's also very interesting based on where you live, how the coronavirus has impacted the fear. It's amazing how, like, I have clients in 30 states, actually more than that, and globally, 2-3 weeks ago is globally where the concern hit. Some of those areas are doing better now. There are still concerns. I'm not downplaying the coronavirus. It is a big concern. Could have more of an impact on the market. We'll see. The point being is, it just hit Ohio, and that's where most of my clients are from. And I think people quickly came to realize that once this is at your feet or in your home state, it becomes a little more real. And so it's good that people are finally taking this a little more serious, which is good. Let's get to the price action. We basically said yesterday, hey, watch the 2820-ish level, the 2780 level, 2750 level, and 2725 could go as low as 2700. It went exactly in those levels. It's 100% technical base, not a surprise. The more you go down, the more technical usually the market is. Again, you could say technicals are a complete joke. That's fine, not a problem. But it does helps with emotions during these times to say, hey, the market could test these levels. Ignore your balance in your account. You're going to lose your mind. Okay, so that's why we use technicals to help us with entry and exit points. Again, to kind of recap, in the market was 33.90. We got out with about 50% at 33.80. That was great timing. We have slowly been adding that 20, that 50%. We have about 25% less. So we're much better off than many, but it is brutal. It is ugly. It's not fun. I apologize for that. This is not fun for me either. I try to do my best. Remember, I don't have a crystal ball, but we do try to keep you aware of the good and bad. So we're going to take a non-biased approach to where we stand. It's good and it's bad. There's some good things and some bad things. The bad, it was ugly. The market was down basically 5%. The S&P 500 down 4.89%, as you can see here. It tested as low as 2,700, which you should not have been surprised. I told you would likely happen. And 2741 is where we close. So we're in no man's land, to be honest with you. It'd be nice to see a little bounce, and maybe we'll get that on the president's speech. Hopefully it's not stimulus. It's more in the impact of how we can prevent this and help the economy, as opposed to fiscal stimulus, which I'm not sure is going to do much for anybody at this point. The last rate cut was just ill-timed, to be honest with you. In short, here was the range we were talking about previously, basically the 3027 level to the 2855. And we said, hey, previously, May, June, July, August, September, October, that many months we chopped back and forth last year. How quickly we forget that. I mean, these are big moves, guys, really big moves. Now we broke out of that, which is unfortunate, but we could quickly get back there. We were very close to getting there today. So keep that in mind. Don't lose hope there yet. Keep a balanced mind. It was not pretty, but let's go to the short-term view. The last couple days, it is choppy, okay? The last few days, it's ugly. These are not fun periods. It might look small in movement, but guys, top to bottom, this range we have been testing, which, W patterns are normal at a base, and I'm not saying this is a base, but we're starting to see some companies start to get some bids here. Not everything is, but it's good to see the Qs, the NASDAQ 100, at least do better than most of the other areas. Again, it's still not pretty, but it's still outperforming many of the other areas, which is, when all this is said and done, I still think information technology will probably, in many of the tech areas, will be very strong. But nonetheless, here are the key levels: resistance above, support below, RS, resistance, support. We are currently at 27.41, support below 27.34. Could it require a huge flush overnight or even during the day for us or institutions to say, time to get in? Some people are asking me, Jonathan, these levels and it keeps going lower. Why aren't you selling? To be candid with you, it could happen so fast that this reversal happens that your market order or limit order does not get in until it's way too late. And that's what concerns me with the amount that I have in right now. We're at a critical point where this could quickly shift at the 20%, or it could get ugly quick. Obviously, I have levels at the 2,700 where I want the heck out. But nonetheless, that's the key level we're watching. I might allow it to go a little bit lower than this because I think many others are watching this as well. I think there could be a big scare below that and then quickly rally. So I don't know. I don't have a crystal ball, but that has been the battle between institutions and retail, where it goes a little bit lower than you expect, freaks everybody out, allows for institutions to get in a little bit lower. The VIX, interesting stats out there. Not to scare you, but I see this. I'm not ignorant to it, nor do I ignore it. The VIX has not had 4 closing days above 40 since the recession. Does that mean we're at the bottom? I don't know. Or does that mean we go lower? I don't know. But I will say the numbers are pretty extreme. Doesn't mean it can't go lower. So that I'll leave it at that. But there are some pretty extreme levels that I don't think we're there yet, but we'll see what the market decides. That's the final word. What else did I want to show you? Advanced decline. This is really interesting. Advanced decline in stocks. The lowest level since the recession. You're going to hear a bunch of these terminologies. Hey, you could take it in 2 ways. Does that mean we're bottoming? Or does that mean we have much lower to go? Because clearly this is no 2008 yet. It could. I'm not saying it's not. I'm not saying we won't rally. It's not a pretty picture right now. But we are holding key levels. That's the summary. I don't want to sell yet. I think it'd be stupid to before we really break down. If it goes below 2,700, it could get ugly quick. There are some interesting things that happened today that kind of prevented me from making any rash sell decisions. The TLT, which you would think, which is the TLT is a 20-year treasury bond. It's an ETF. You would have thought today that would have been much higher. It was down today. Let's take a look at a few things that I wanted to show you. Ugly day, as you can see. Futures are not pretty. After the market actually did okay, it's holding the key levels. Gold, you would think would be higher on a day like today. Nope. So does that mean money is shifting out of the conservative areas and shifting into, 20% down? This is where a lot of companies, institutions begin to buy. I'm not saying that's going to happen. It could just be people getting the heck out because they have big gains there. Or they could be shifting to other assets that are down significantly. But it's weird to see yields up on a day like today, with the exception of this 6 month. Not really focused on that so much, but more the 10 and 2. Big move here. I mean, this was actually negative at one point, the actual T-note bond. You would not have expected this. I would have expected this to be much higher and these much lower, to be honest with you. So a lot of weird things, a lot of shifts, a lot of things are happening quickly. Again, nobody likes a 5% move. That's the environment we're in, so don't do anything stupid here. Don't let the news or the recency bias, the news basically right in front of you now at your feet. The coronavirus just hit Ohio. Don't let that scare you too much, because again, it's been most other places so far. Again, take it seriously. Take the warnings very seriously because it is legitimate. But the market will decide whether a 20% discount makes sense or not. Does a 20% discount Makes sense for an Apple. Does a 20% discount make sense? There are several good companies down 30%. Does that make sense? Will their production reduce for probably 3 years at 30%? I don't have the answer for you. I think no. I don't think it's going to impact things that much. But again, I watch price action, not use my own biases toward trading. So I hope that helps. But that's pretty much everything we have today. I'm going to check to see if I want to say anything else. Again, the key levels we want to reiterate. This the 2734 level will be tested. The 2750 will be tested. We might test as high as the 28 and above levels. It very well could happen. Don't be too bearish here until we break down. Okay. Throughout history, the more bearish you get and the more news you watch, you're going to be leaning toward selling. That they make money on selling the news. So again, I'm not saying it's not legit news, but the news is not the market. And until you understand that, you're not going to be good in this space. Your emotions are going to kill you. And obviously, coronavirus is getting all the news right now. So president's speech tonight, who knows what that will mean for the market, but don't lose your mind here yet. It's just W price action. It's huge, huge moves, which makes it even worse. But let's not make any rash decisions till we fully break down. So thank you guys. Hang in there. Not fun for any of us. I'm going to go to bed. Love you all. Bye.